Hi, and welcome to the Stock Scores Market Minutes for July 9th, 2018. All right, this week I want to talk about the price of uncertainty. Investors don't like it when there is the potential for something negative in the future, an event, a catalyst for a downward move. The market will often price that negativity in before the event actually happens. And in doing so, they tend to overprice it. Investors, because of fear, will take prices down too far in anticipation of something negative. And that's why markets will often rally after something negative has come into play. Basically, the markets go down too far in anticipation. With bad news, the market will sell the rumor and buy the news. Now, this shows up in the trading action of the last little while. We had a break of the upward trend line right there, and that was caused by the tariffs that the US was going to place on China and other countries. Those tariffs came into effect here, and notice that prices have rallied on Friday on the actual event happening. Along the way, we had a downward trend. We had a lot of volatility. The market was nervous that the actual event was going to be worse than it was. And once the event came into play and there wasn't something more negative, well, then the market rallied. And this is why we often see markets rally on bad news. It's because they price in the negative news before it actually happens, and they tend to go too far because of fear. So what do we have now? Well, we've got a market that moved down in anticipation of the tariffs against China. And on Friday, we broke that downward move, breaking through this horizontal resistance from an ascending triangle pattern. And that points to a move likely up toward the highs in the 279 range on the SPY. Now, we are a little overbought on Friday. I wouldn't be surprised if we pull back a little bit first, but ultimately in the week or two ahead, I expect that we will get back to those highs with a good chance of that happening. Looking at the longer term chart, we are still in this process of reconciling the euphoric market that we had right here when it ran up and away from the trend line. We've pulled back to the trend line, and now we're kind of bouncing around trying to decide if this is in fact the way that the market wants to go. Does the market going to continue in that upward sloping channel? My sense is most likely it will, but I think it's still going to take some time. Short term, we probably get up into this 279, 280 area, get stuck, slowly build a base, and then start to move out from that and continue in this upward sloping channel. Onto the small cap market, which has been doing quite well in the last couple of months. And we had a little bit of a pullback. I thought we'd see further weakness, but in fact, we had a nice bounce back this weekend, and that keeps us in the upward trend. We are at the top of this channel, and that usually means that there's not a lot of upside potential. We've got some upside until we hit the very top, but we are on the upper boundary of it. So I would say the buyers are a little bit euphoric, not terribly so, but it does set up for the potential still for some profit taking. I don't think we're really that ripe for profit taking yet. There is some good action in the small cap area. Just realize that it's getting riskier than it was when it first started the move out of this pennant pattern a couple of months ago. On to the Canadian market, which also bounced on Friday. You can see breaking that short-term downward trend line and breaking out of a pennant pattern. That points to higher prices ahead, although it will get stuck at that resistance level. That resistance level makes a lot of sense when you look at the weekly chart of the TSX, because of course we are at long-term resistance, which we've talked about for many weeks now. Upward trend line into that. We're trading with quite low volatility at resistance, and that should lead to a breakout to the upside. It's just a question of when. Wait for that strong breakthrough resistance before you get too optimistic about Canadian stocks, but certainly any day now we could see a resumption of the upward trend. Onto the TSX Venture, which is not looking very good. We've talked about this for many weeks now. The market is in a downward trend and has been that way since January. And until we can break the downward trend line, there's not going to be general strength in this market. Although, because this is a market of stocks with relatively small businesses that can go good or bad. An individual stock can still do well in this market. It's just you're not going to get general strength in the market because the sector is quiet. Onto the Treasury bond market, and you can see that we had an up week this week, breaking us through this very short-term resistance. We have optimism short-term. Next stop is up here, and of course, as this goes up, interest rates go down. We are holding that long-term support. The only question is whether we can break that downward trend line, because we're right there now. So on one hand, we broke through horizontal resistance, but on the other hand, we're at that downward trend line of resistance, and that could be an impediment near term. US dollar had a down week this week. Of course, it has been up quite solid over the last 3 months, but it went to a decent open for the week and then closed weak, and that could lead us into this range here, 24.6 on the UUP ETF. Not really a break of the upward trend line just yet, but certainly signs that there is some profit taking or some selling pressure for the US dollar. Probably continues for the next week or two. And that is helping gold, which has fallen to its long-term area of support, and it closed this week above the open. That's why that candle is green. It closed above the open. Anytime you see a red candle, it is a close below the open. We are somewhat oversold. There's the downward trend line, and you can see that we are well below that. And now it is a question of whether we bounce up to the downward trend line or if we simply go quiet and then ultimately break down through support. So the next week or two could see a bounce for savvy traders. You might be able to trade the gold stocks on a little bit of a bounce, but there is no sign that the trend is reversing yet, so you should not be accumulating longer term positions in gold just yet. Oil market, upward trend. We pulled back to the trend line. We had a real solid bounce, and we're now at the top of the channel where the market will likely get stuck. And so my expectation is not too much upside near term for oil. Maybe it goes sideways, maybe it drifts lower, but not likely to go a lot higher next week because it is at that resistance level. And finally, the fear chart, which of course is based on the options volatility in the S&P 500 futures market, or the implied volatility rather, not the options volatility. Doesn't matter. What's important is that it broke that little upward trend line, and it looks like it's going to settle back down into lower prices as investors take some of the fear out of the market. So my ratings then: US stocks bullish long-term, neutral short-term. Canadian stocks neutral long-term, but on the verge of a breakout. I've got a bullish rating short-term. It needs to break through that resistance to go bullish on both time frames. Gold, I've upped my rating to neutral on both time frames as it is at support where it should bounce. Oil, bullish long-term, neutral short-term. It is at the top of that range where it should pull back. Investors who sold US stocks are buying them back with the passing of the implementation of US tariffs. Essentially, it was sell the rumor, and now that the rumor has passed and we have the tariffs in place, people are buying it back. It doesn't appear as concerning as it was thought. More likely to go higher in the near term, but the upside is still somewhat limited for US stocks by that resistance level. Canadian stock could break out any day, something to watch for. Gold is bottoming as the US dollar is ready for some profit taking. Oil is steady but somewhat overbought and perhaps due for a week of profit taking. This week's trade of the week is a worm trade. This is my day trading strategy. I look for a stock scores action candle, which happened right there at the open on Friday morning. And what I love about this one is that it came from low volatility, from some optimism, without a big price gap. When there's big price gaps, it prices in a lot of the upside potential. This one didn't have a gap, but it made that show of abnormal activity that triggers an action candle, and it led to a reward for risk on this trade of better than 6. What that means is if you take $100 of risk, there is a $600 of profit. Now I want to be clear, when I say $100 worth of risk, that does not mean a position of $100. That means the difference between your entry price and your stop loss price multiplied by the number of shares that you purchase will cost you $100 of a loss. And in this case, that would have led to a $600 profit. What's important is that this earned us 6 times risk, and that is how you make money trading the market. Well, that has been the Stock Scores Market Minutes for July 9th, 2018. Hope you've enjoyed the video. If so, click on that like button, subscribe to the channel for instant updates, and to get them right away, click on the little alarm button in the lower right. Most importantly, have a great week in the market and trade well.